All right, team, welcome back to After Hours. We are going to have an amazing show for you guys today. If you guys are HBAR Hedera holders, it's going to be an especially interesting show because we are going to be discussing how Hedera is laying out the framework for how tokenized real estate fractionally is going to be working for people like you and in the back end. So today we're going to cover a little bit of what the back end looks like. So if you are going to buy a tokenized real estate property in RWA, you can know exactly what's going on in the background. So we're going to discuss what's going on at the SEC Crypto Task Force. That's kind of paving the way for this. We're also going to discuss, if we have time today, about Algorand aiding chess world, with these decentralized digital identities. And maybe if we have some time at the end today, we can look at some charting. I think we will. We have to make time for charting every single show for you guys, so we'll make sure to do that. This is After Hours. Maddie, thinking about the macro here, we're seeing a rebound in stocks. S&P has rebounded 17.5%. The Fed's likely not going to cut this week, so we're not going to be seeing that occur. But, that doesn't kind of change the whole yearly outlook because we are still expecting some rate cuts in the future. Talking about crypto specific, we have a crypto bill sitting in the Senate right now. The stablecoin bill that we've been talking about is sitting in the Senate, and it looks like Dems and the Republicans are having a little bit of a tough time, a little bit of a tough go here. It looks like Dems are still a little bit split, with the split being led by Elizabeth Warren. Still a little bit unsure about crypto, and the Democrat side and the Senate is like, hey, the Republicans in the last several days is adding all this stuff, and this is unsafe. And so we don't really know what's going on there. This is just coming out this weekend, so we'll see what transpires that. So that kind of encapsulates what's going on. We got regulation, we got stock market rebound. That's really good outlook for crypto. And then we also have, Fed rate cuts this year, not unfortunately happening this Wednesday, the May 7th meeting. But Maddie, what is your kind of outlook for 2025 for crypto?
I'm still incredibly bullish on crypto. I think that a lot of people have switched bearish, or even at least switched bearish a few weeks ago, and not just short-term bearish of, hey, this is a strange catalyst that's maybe interrupting our timelines. But I think a lot of people switch long-term bearish, meaning 8, 12, 16 months bearish when they saw that price action. I personally did not flip bearish. I think that I actually became more bullish at a lot of those zones where we saw key levels hold. Now, of course, some assets held up a little bit better than others, but especially assets like Hedera, and Algorand and Cardano, all maintaining super key levels. Bitcoin doing the perfect rebalancing move that we've been waiting for there. I'm very impressed with, like you mentioned, the stock market rally and recovery there. Of course, the jobs report on Friday fueled a little bit of that recovery there, getting a little bit of a better than expected report in conjunction with some revisions from the previous two reports there. So again, I think that one of the things that we need to remember to do is, one, when we hear noise, of course, news, pay attention, but understand a lot of it's just noise, right? And we're going to see a lot of this back and forth nonsense. A lot of this is meant to shake the markets up. And Trump is a very volatile person when it comes to policy. And, like him or hate him, he is a volatile person. So when we hear these announcements come out, you hear all these tariffs, you hear all these things going on. Yeah, it's going to impact price short term. But for me, that doesn't change the long-term vision. I'm still hyper bullish on the cycle. And I think it's just going to be a cycle that involves more corrections along the way, which does lead to a more sustained and healthier market. And maybe you're actually going to entice a larger cohort of people to join in the market if they start to see more of that trad market behavior in things like cryptocurrency.
Yeah, I love that commentary for Trump. Fed Chair Jerome Powell has no idea about interest rates. I think that's hilarious, because we get coverage every single week on the live show from Dan, and he's talking about the dual mandate at the Fed and kind of the tough position they're in right now because they have to employ maximum employment but also steady consumer prices, keep inflation down. So inflation's kind of near their 2% target, especially if you look at the core, but then we got unemployment rate kind of staying the same right now. So it's like, do we cut right now? So I understand the kind of hiccup they have there because Jerome Powell is going to come out Wednesday and be like, well, our economy is great, just like he said 2 weeks ago. So team, we'll see what happens there. If you want coverage of that, of course, watch that on the website. And to do that, you need the code. You need to use code YouTube to sign up at CryptoCharge. Maddie, I just kind of dropped that there. What is CryptoCharge?
So Crypto Charge is where we're from, guys. It's a comprehensive educational program. I'm not a part-time participant in this space. I do this full-time and have done this full-time for the past 4 years. And we bring you guys live updates Monday through Friday. We give you guys a lot of resources on our website, including our coin library with comprehensive exit and extra plans. Of course, we have lots of educational material like the consistent investor strategy. A lot of stuff to just kind of help you guys get dialed in. A lot of charting material in there to help you guys build your own charts, make your charts that look like mine. So if you guys feel like what I have up here is attractive or things you guys be interested in, we have a 4-part series to walk you through that, and that's all tied together with the Discord community. So a lot of programs will be like, hey, here's our course, it's going to be $1,000, and best of luck, right? And then just hope that you do well, and if you don't do well, oh well, they collected their fee. We have a monthly based model because we know that you guys are going to pay us on a consistent basis because we're bringing you that value each and every day, not just selling you guys a course. So with Cozy YouTube, you guys get 30 days free. You also get 50% off any membership of your choosing. So you either get $49 a month for the monthly plan or $4.99 for the year with the yearly plan. So you guys save even a little bit more money with that yearly plan if you guys should choose to do that. Either one comes with a 30-day free trial, so I hope you guys do check it out.
Absolutely, Matt. All right, team, let's get into some of the news we have for today. Quick, brief news heading right here. We have the SEC and their crypto task force. They are meeting next Monday, May 12th at 1 p.m. Eastern time to discuss tokenizations. Wow, shocker. We've been talking a lot about tokenization this year, and it seems that Paul Atkins, new SEC chairman, replacing Gary Gensler and the commissioners at the SEC, along with the rest of the crypto task force, want to discuss tokenization. This is very interesting because we've talked a lot about it and relates to a plethora of different protocols. But today in specific, we have Hedera. They're kind of doing like a couple blogs within the last couple months, and we just got another one recently. So if you were with us a couple months ago, we did a whole breakdown about tokenization and what it kind of looks like. So we're kind of going to go over that again, but we're going to get a little bit more in detail about what it means for, like, okay, you want to buy a property and you're going to get tokenized fractional shares of that property. What are some things you should know about? So team, this is maybe a lot of speculation today because I'm going off of these Hedera reports. We're going off of what this can look like in the future with DAOs or Borg. So I think at the very least, you're going to have good knowledge going into the future about, like, okay, well, how does it work if, we have a property and I'm one of the owners, and how do we get through, governance of making changes and, rental income, or anything that could relate to, decision making or, the property itself. How does it work to have shares of a home? How could that even, because this is so foreign to this market, Matt. The real estate market is so old, it's so archaic, everything's slow, everything's expensive. If you want to buy a home on a single family home, you still need a large cash infusion of 3 or 3.5%, so you also need, with that, the closing cost, the down payment closing cost for your total cash infusion. So to get a single family home, it's expensive, and there's ways we can get around that with fractionalized shares of the home. But talk about investment properties, Matt. You need 15, 20, 25% to put down on the home. That's a large sum of money to invest in homes. And so for me, I'm pretty okay with just buying crypto tokens, holding it in my ledger, and investing that way. But if we want to see progress in real estate, the accessibility has to be there, Matt. I mean, just talk about how hard it is to get a home today.
Yeah, there's definitely a lot of barriers to entry. There's a lot of pieces of the process that are necessary, but the way that we go about them right now is incredibly slow. Whether you want to talk about the title process, and that's really kind of, I think, one of the bigger pieces that we get hung up on outside of payments itself. Is that you have to actually have the transaction recorded, right, at a county level, proving that there was a transfer of ownership from one party to another. And that process can be slow, it can be expensive, and of course, anytime we put the government in charge of anything, whether it's recording land deeds or the DMV, we know that it's an unnecessarily excruciating process. So when we're able to tokenize things like title, and we're able to, more quickly and easily trade those things with other people, whether they're for, assets or stable coins or volatile crypto assets if you want, because you guys remember, you guys can sell your house for anything, right? It could be a pile of garden gnomes if you want. It is your property to sell. It allows us to do those things a lot more quickly and a lot more efficiently, and it also reduces the amount of human error. One of the companies that we've been following for a while has actually pivoted pretty greatly, and what their initial offering was a company called Proppy. can't remember the lady's last name, Natasha something, but she was big on the educational side of things. But they were trying to do this whole all-in-one process, like software as a service. Like, we're going to connect lenders and agents and customers, and we're going to do this huge platform, right? It's all going to be done on the blockchain, which is, I think, going to happen eventually, and someone is going to create that program. But they've shifted specifically into AI-based title in relation to DLT and blockchain, and I think that is an excellent starting point that truly starts the conversation of like, great, we know all these other pieces are necessary, and you can't change all these variables at once, both from a regulation standpoint and also just from consumers and agents and everyone else having a meltdown because everything's changing around them. But if we could just take that one component like title and make it dynamic and have it on chain, I do think that is absolutely revolutionary and is a very big starting point for taking the real estate process and putting it on chain.
Absolutely, Matt. This way of tokenization is going to be necessary going forward in this archaic market class. And so I want to discuss, look at this graphic right here. This is your real estate asset. And so you have a building, all right? You're going to have an NFT, you're going to have the fungible tokens, you're going to have the treasury, the vault, the governance. These are kind of going to be the prongs of what is going to take place under the building. So shares of the property are going to be issued, okay? You can get 1 or 2 shares of the property, you can get 5, 10 shares, or just tokens, right? So if the building is 100 tokens in total, you can get 1 token of the home. They'll probably have a bottom basement token threshold that you can get, or the minimum side of it. Or you can get 50 tokens, so you can own half the property and then have a couple other investors that hold tokens as well. So you can be like, a 3-person ownership of the building, okay? And this allows for a way, let me remind you that when you put the home and you tokenize it and you put it on a distributed ledger, so much can happen there. One of the examples I was giving to Matt before the show, say me and Matt lived in a home together, okay? Matt owns half the home, I own the other half of the home. And let's just say me and Matt get into a fit and we get into a fight, and I'm just like, F you, Matt, I never want to talk to you again. Well, in the middle of the night, it can be 3 a.m., and I can be like, screw this, I'm done, I'm selling my portion, and I'm moving out. And I can get someone on the other side to hopefully buy those tokens, and then maybe they can move in, or they can put a renter in here with Matt. The ability to move let's just say your portion of the property, because you also have like Maddie that owns a portion, your 50% token ownership of the property, to be able to move that to someone else and to be able to leave on a dime is insane, and has never even really been talked about, because you're in a market where it's high capital to get in. It's very slow. I mean, if you have a mortgage broker and you're working with him and his assistant is like slacking off, it's going to take forever for you to get pre-qualified, to get pre-approved. These processes are so forever long, right? And this could even go to our next conversation with Algorand. But the point being, though, is we need a simplified version of this, okay? And so what does this look like? So I have this graphic here, and this is kind of an overview, and I know this language can maybe be a little bit too much for you, but you have this representation of these ERC regulation. You have AML, KYC practices. So you have to be known. You can't just, if I sell my portion of the home, I can't be like an unknown crazy person. I would be a verified individual. And so I'd be participating with KYC and AML requirements. And an NFT would be issued for your name, address, and picture of the household. So when you're online and I'm on the buyer side, and I go on to X website and I see, oh, Gavin's selling his portion of the home, and so I see the name, the address, some pictures of the house. So that would be an NFT format, and then the funds after I buy it would be sent to the treasury, and from the treasury down to whatever ownership. So say if I could sell some of my tokens to Matt, say we get in a fight and we end off on some better terms. I'm like, hey Matt, let me sell you some of the tokens so you can buy back some. And he's like, well, Gavin, I can't afford all your tokens, so I'm going to give Maddie 20 tokens. He's going to give, me a seller side. He's going to pay for that in USD to me or in stable coins. And then I can get another buyer. And so you got this like 3-way transaction between people that could not do this before. It couldn't even really be done before unless you bought the property and then you rented out a room. Or me and Matt can go in together and buy the home. And then now we have this split of shares of the home. And then if something changes and, I need some money, it's like, hey, Matt, you live in the other room. Let me share you some of these tokens so I can get some liquid capital to go buy more Casper or whatever reason it may be, So it's very interesting. And Maddie, it's adding another arm to having a home or being in a property, right? I'm not really interested in renting. Renting can be good if you take the excess capital from buying. Most metropolitan cities, you're going to spend a little bit more with buying. And so people now have this idea that, oh, they could take the excess capital and invest it in crypto. Problem with that is it puts you in a position where you have to be consistent. You have to consistently invest to outpace. This is where you hear the Grant Cardone arguments, where I would never buy a home, I would just rent. Okay. Most of us know, though, that buying a home is a great way to preserve wealth. It's a sure savings, okay? And so if you're going to have that with another individual, why not make it easy for us to actually transact with these tokens and ownership? Like the amount of people in my generation that, for one, can't own a home because of affordability issues. You got, historically low interest rates, but you have higher interest rates, which are having people to be put in a position where it's like, well, I can't afford this home with this, interest rate because of affordability, monthly affordability with month over month. This mortgage payment's too high, even though I would argue that's silly. But point being, though, is you got affordability, you have, people that are not liquid, and the ownership, ability with transactions, Maddie, is silly. So what are we going to do? What is the SEC Crypto Task Force looking at? They're looking at tokenization. And I think we understand why it's a sure way, Matt, that this will actually be taking place in the future. What do you think?
Definitely. And guys, this is really where the conversation of securities and commodities come into play here, and why I've always said that there can be instances where you can have interaction with DLT or crypto-based products, but then also have security law nestled into that. And previously, the SEC clamped down and they said, you know what, this is all a security. Every single coin out there, except for Bitcoin and ETH, constitutes a security because it represents value in a network. And we realize now that that's not the case, right? Because they are gas tokens that we utilize to perform actions on those networks. However, real estate can be a security, right? And when you tokenize things like this and you have fractional shares, what are you technically doing? It is an investment of money in a common enterprise with the expectation of profit based on the effort of others, right? So that is basically the four big prongs that constitute a security. However, it's being tokenized on a blockchain, right? So it doesn't mean that that anything that runs on that blockchain or everything automatically becomes a security. But there are going to have to be regulations and oversights from the SEC when it comes to tokenizing securities. And I know that sounds like a very backwards way to think about it, but it's an important component that we think about. Hopefully now we have a different page in the book, a new chapter with the SEC where they truly want to help make this a clean bridge and give us those bumpers, right? Making sure that we're not chokeholding regulation. We're giving ourselves bumpers to make sure that nefarious people aren't coming in and, selling things to unsuspecting people that don't truly understand it. But it does unlock a lot of value, unlocks a lot of liquidity, and it allows us to also take other markets that are maybe not as liquid and automatically put them in smart contracts and trade, right? Imagine instead of, if we're talking about previously tokenization of treasury bonds, right? Now, if I want to, instead of receiving cash, someone could say, hey, I've got these T-bonds, they're sitting at a 4% rate. I'm just going to take these tokenized T-bonds, put it inside of this side of the offer. You give me your NFT that represents the house, and we can just make the swap, right? It creates a lot more interesting liquidity rails that you guys might not think about previously. And there's probably a huge cohort of people that don't care about that stuff, but there are going to have to be a lot of rules and regulations put in place to make sure that people aren't committing fraud along the way. So I'm excited about it. I think that there's a lot of conversation to be had over the next 10 years about it. And if you guys are in the real estate space, I hope that this doesn't scare you. You guys should be excited about this. You guys should be excited to learn about the process, embracing the tools, because it will take your job if you choose not to embrace them. But if you choose to embrace them, you will be the expert. You will be the people talking to your clients and coworkers and everyone else around you. And you're going to be the most knowledgeable person about it. So don't ignore that opportunity.
Love that, Matt. And team, go refer back to the Hedera episode we did, because I'm going to kind of piggyback off that episode because we talked about use cases. And so I'm going to skip past the use cases because we've established in that video that Hedera as a blockchain is a great blockchain to have tokenized real world assets deployed on the blockchain because it's efficient and it's super unique. But three prongs I want to talk about this is the minting of the building, and then I want to talk about regulation and building governance. All right. So we're at the 19-minute mark, so I'm kind of going to fly through this. But, you have the building's equity divided into small pieces. And so you can have ownership and then take advantage of those small equity pieces you have in the home via the tokens. So like I said before, you can own a fraction of a home and then sell it in the middle of the night if you want to. If you lash out with your wife and it's like, well, you guys, sell some of your tokens and I'm moving out, buy back some of my tokens. And then you have the regulation front. So you have ERC 20 standard, but the Hedera has moved into the standard of 3643, and that is going to allow proper AML and KYC requirements. There's $28 billion in real world assets that have been done on that standard. And it's been done for that reason, because it is a sure standard that's going to allow, companies and firms come to a blockchain and start deploying tokenized real world assets. And then you have the governance, right? And so I'll flash this image again here. It's the image I showed before. But of all these points of emphasis as it relates to governance, so you have the proposals created, someone like Maddie will offer a proposal. Voting power would be allowed in governance. So you could, vote, for, against, or just abstain from voting. And then ultimately there would be a text-only decision, and then that way the governor could make a decision on policy, and so that policy would be enacted. Let's just say, for example, you own an apartment building and you want to change policy to pet ownership within the apartment complex, right? And so you could offer this up, and then we could all vote on it, for, against, abstain. The whole owners could do, and then a text-only message would be deployed out of that. The poll, it's kind of just simply polling, right? And then the governor would be able to make a decision, and that would probably be in a Borg. There's a difference between DAOs and Borgs. Borgs allow for more flexibility. It's not always equal ownership across the board. A Borg would allow a governor to step in and make decisions, so you can have a speaking voice. So it's like a first among equals approach, where hey, me and Matt might be equal, but I might want Matt to talk about a particular topic, right? Like Matt's always doing the charting, so Matt on that front is going to lead the way in the way a governor would for a property. And so I think those points make it super simple and easy for you to understand that this is coming in the future. Hedera blockchain is going to be used because it's super efficient. I mean, I talk about it all the time, but every time I open my X account, Matt, I'm seeing new Hedera updates. They're always putting out blogs that are informing me in particular. I learn a lot from their blogs because it tells me what direction we are headed in, because, the Hedera Council is made up of a bunch of smart individuals. Remember, in the running for SEC chairman, we had the one guy that's in the Trump administration that was on and still on the Hedera Council. So Hedera Council is full of smart companies and people that are innovating, especially in the DLT space. And so what is on tap in the DLT space right now? It's tokenization. We just saw from the SEC's crypto task force, they are spending an hour and 30 minutes at their upcoming meeting to talk about tokenization, right? How are we going to take advantage of it? We can't really just buy a home right now, right? I would be buying the tokens of, some of these protocols, right, Matt? I think that's the only way you could approach this right now. But be aware of the things that we're talking about, team. The, Coinbases of the world that are bringing features for you to borrow against your Bitcoin, or, the Fold app. Fold just became a publicly traded company, and I'm getting my Fold card, my credit and debit card, to see how I can actually use and pay with that card and then get back Bitcoin after that payment, right? It's very akin to the Coinbase card we had and used during, 2021, 2022. So
yeah, that was nice.
So team, we are really on the edge here of some great things. It's important to keep an eye open at these opportunities. We're going to cover it. But Maddie, I know that was a whole yap session and a half, but team, just, making you aware of some of the ways and things that are going to be taking place on the Hedera blockchain, with first coming in to have the confidence that they're not going to get hit by the US government, that they can come in and adhere to AML and KYC requirements so they can tokenize assets on the Hedera blockchain. Why do I care about this so much? Because it looks like the American government, or at least the SEC, the independent, cares about crypto deeply to talk about tokenization, which is something we've talked about so much. Maddie, I think it's important here. I'm just, crossing out, we're at 23 minutes here. We are crossing out the Algorand segment for today. We'll maybe get into that in another show. But I want to look at something people care about a lot, which I do too, the charts, Matt, what does the Hedera chart look like right now?
Yeah, let's take a look, guys. I've obviously covered this macro look many, many times over. I do love that we've done a proper retest in here after we had our breakout structure, and I do hope that over time you guys start to see that the markets don't care about your timeline expectations, and they certainly don't care about the number of tests that you think are required here. I do think that you guys might get another opportunity, just kind of based on what we're seeing price action right now. Now, we are above the 50-day, right? You guys see that there's a nice break over the 50-day, showing a little bit of weakness here underneath today's daily candle here on the HBAR chart. But I think you guys might get another opportunity down at maybe like this level down in here to maybe snap up one more, right? Maybe a dollar, 14 cents, 14 and a half cents might be a good area of interest for you guys to target from current market. That would be about a 16% discount from current market price. I think that we built such a beautiful floor support here. All through basically 22 through 24. And this is also why it's so important that you guys employ some sort of DCA schedule and be almost agnostic to some of the volatility and vacillations that you see in the bear market. Because even if we just study what was happening here, and let's ignore this breakout here that everyone said, oh, that's it, and went back down to go, that's it. Bull market's over, right? Wrong, very much wrong. It was more of a confirmation that we were breaking over local highs. We didn't deviate below the lows in there. But even if you had just basically bought anywhere below 7.5 cents here, right, you'd be up at least 130% right now. And that's without you doing any magical timing or figuring out the absolute best limit order. Of course, yeah, we set some limit orders when we saw that there was a meaningful amount of price action down here around 4.5 cents, 5 cents. We set some limits in here, but really the majority of the work that was done, where most of my team has anywhere between a 5 and an 8 cent average on HBAR, was done here in the bear market through consistent DCA behavior. So do you maybe get another chance of somewhere between here of 12.8 and 14 cents? Sure, absolutely. But that's the higher low I would want you guys to focus on because as we've seen here, now the risk to reward for HBAR, as we've kind of gotten into our Fibonacci's here, the 236 puts us around 16 cents. We've got that local high here around 13, so 13 to 16 kind of be that pocket. You really now have to focus on buying the higher low, which is not a bad thing. And I want you guys to buy the higher low, not buy it into impulses, but it is the second best thing, not the absolute best thing, because you don't get the same luxury as a lot of us do that have built averages in this bear market to be a little bit more flexible with those risk to rewards. You can see if we were to grab maybe another test of like that 14.5 cent region up into that 1.618, gives us about a 5x reward, which is absolutely fantastic. I definitely would encourage you guys to be looking at 89, 90 cents as one of your considerations for take profit one. We don't have any imbalances left behind here. So that's how I'd be playing this, which again is a great risk to reward ratio. It's if you were to even pin up Bitcoin at 94K to $240,000. Woo! Like, again, I don't really care about the price itself. A 5x on HBAR to TP1 is vastly better than Bitcoin at $240,000. So I hope you guys look at some of these opportunities. I think there's even better opportunities in HBAR, but that is the area of interest I would personally target if I was really keen on getting more HBAR.
Good approach there, Matt. Peter Lynch talks about something where it is taking advantage of your surroundings as an investor, because the people that are doing their day-to-day in their office on Wall Street, looking at assets to invest in for them being fund managers and adding assets, they're not really tapped into what's going on in the day-to-day, where you as an investor can be going through your life and understand things that are evolving within your local city or county or state that could be capitalized for an investment. And something for you, just like Matt said with the real estate thing, you guys should realize how archaic this industry is. And you're not, when you buy Hedera, the HBAR token, you're not necessarily investing into real estate, right? You're not getting a tokenized property. You're not holding a share of a property via a token, okay? But what you are doing is you're investing into a network that can be the ground fundamental network for people that want to come in and tokenize assets on a network. So thus you can buy the home in the future using maybe HBAR tokens or however you want to do it with stable coins, USDC. And so team, pay attention to your surroundings, all right? You recognize how archaic this industry is. Take advantage of it by investing in something that's going to be ground level important for tokenization in the future, that being HBAR. Matt just went over, it's probably not the best time to drop a lump sum of investment into, because we're above the 236 right now, which is a no-go big investment for you right now, right? We talked about a couple weeks ago, it dropped below the 236. We were saying, hey, DCA on. If you had your DCA on right now, I guess it's fine. You're in a good range. But as it relates to risk to reward with everything else, it's like, well, you're kind of hurting yourself because look at that price action we have on this chart right here. We're a long ways away from the depths you had there. And this is why we talked a lot about HBAR last year. So team, go into it now. Maddie, what's the decision here? I mean, we're above the 236. Is DCA on? Yes or no?
I mean, discount wise, I mean, you're breaking the hard and fast rule of the consistent investor strategy here. We're down about 55% from those local highs in there. For me, I see so many other opportunities out there, whether we're looking at the Algorand chart, that's a lot deeper. First of all, discount wise, right? We're down like almost 68% on Algorand. We're deep in the value zone there. You got Zcash underneath $42 right now. That's an automatic DCA all day long. And, you got Casper here still underneath 2 pennies. Like you just got so many choices out there that are fantastic. So I would be more picky about my HBAR entry. I'd set the limit and I would focus my DCA on anything else right now.
The show, HBAR is amazing. Oh, tokenized real world assets on HBAR. Climax of the show. Should we buy HBAR? No. So team, I'm sorry. Put it on your hit list. Put it on, your list that, hey, once it reaches the value zone, then I will crank the DCA all the way up. All right. That's the smart approach here. Don't be sour at that decision by Matt, because we all agree here. We've been talking about buying under the 236, or, most of the times we get very picky with our buying, even if it's, slightly below the 236, by 10, 15%. We want those great value zones. We want to be buying the bottom. One of the tweets this week that was inspired off a show last week, Maddie was talking about sushi and Filecoin. And we talked about it afterwards. It's just like these people are so silly that they constantly come to the shows and we talk about these assets that, I'm not going to say all assets do well, because they won't. All assets we talk about won't do well. But a lot of these assets come around, and they come around hard, all right? XRP, HBAR, they come around hard. Casper pumping, Zcash, during the last, 6 months has performed well. Yeah, it's down a little bit, back into some good buying zones. But these assets are so volatile, Matt. And when they get going hard. And so team, what do you do with an asset that's so volatile? You buy at its lowest point, all right? Is HBAR at its lowest point though? No. So, hey, I think, you got to take Matt's words of wisdom on that and be a little bit more strategic and buy some of these other assets we talk about. So team, that's all we have for today. We will see you guys on the Ask Matty show, 2:30 p.m. Pacific this Wednesday, which will be the last show probably until next week. We don't have a show next Monday for some particular private reasons, but we will be back with you this Wednesday. So if you have any questions, leave it in the comment section down below and we'll make sure to bring those up on Wednesday. But until next time, team, bye.